back. You're watching India Market Open. The Street's focus is on earnings and talking about earnings. Granules reported numbers. And we have with us Krishna Prasad, founder and CMD of Granules India, joining in to talk to us about that. Granules, of course, has grown 200 times in terms of revenue in the last 25 years. Very few companies, Mr. Prasad, have managed to do that in terms of growth. The Street, of course, would love to know whether or not you're going to be able to double down on those revenues over the next 4 to 5 years, because that's the kind of historical growth you've managed to pull through. But yeah, great company. I think you know that already. But to just start off our conversation, how has the quarter been? How has your top line been? Margins have seen an improvement. I believe raw material costs are finally bottoming out after the last 8 to 9 quarters. It's all in all looking pretty good for you now.
Good morning. The quarter has been stable, I would say. I don't say it's been great. Margins have improved. That's a good sign. And focus has been more on bottom line rather than the top line. That's why you don't see too much growth in the top line. We also had a few challenges. Some of the materials that were supposed to reach the US couldn't reach on time because of the Red Sea crisis. But all in all, we had a very satisfactory quarter. And we see the good thing about last quarter was the new product launches from India and also from the US, manufactured in the US, have added to our revenue and also to the gross margin. So we do expect this trend to continue, and the new products will continue to help us grow the bottom line.
You know, Mr. Prasad, you did start by saying it hasn't been great. It's actually been in line. Tell me why you feel like you don't seem as impressed, if I may use that word, because on the face of it, those numbers, like you said, bottom line is looking good. What on revenues is not as good as you'd have liked at this stage? Is it geographies? Is it US sales, Europe? You want to break that down for us, or is it more product focused?
We had a few approval delays in Europe. We were expecting some good products to be approved, and we were hoping to launch them in this year, in the last quarter. And that was a little disappointment. That's why I said it's not being wonderful. We would have liked it to be much better.
Mr. Prasad, when are you expecting those approvals in Europe to come through then?
We're keeping our fingers crossed. The European authorities are backlogged thoroughly. We are just keeping our fingers crossed.
Okay. And what sort of revenue contribution could those approvals then do for your top line?
It will be a slow improvement, but European business will start going up and possibly, on a yearly basis in double digits.
Yearly basis, double digits. And for now, Europe is on a decline. Is that a fair assumption?
The decline was mainly due to paracetamol, the API sales. We were selling a lot of APIs in paracetamol, and the formulations were a recent addition. Formulations are picking up. PFIs were there. So the decline was API. And from now on, we don't expect an API increase, but we expect a formulation increase there, which is more profitable.
Right. I want to talk about formulation as offering in a minute. But just before I do that, a quick update on how the US business has grown and what's the outlook there?
US has always been a focus, though for the last few quarters, more than a year, we've been trying to develop other markets like Europe and South Africa and other places. Europe still continues to be a prime market, and we do expect US will always be our biggest market, leading the formulations. We have a lot of products approved and a lot more in the pipeline, and we do think that US is the market that will contribute to maximum revenues and bottom line for Granules in the medium term.
You did mention in your last con call as well, Mr. Prasad, that the solid growth or growth driver for Granules would be formulation business. Can you break that up for us, how that's looked in this quarter, and what is the outlook in terms of revenue contribution coming in from formulations?
Formulations this quarter was about quarter end discussion is about 62%. And compared to the same quarter of last year, there's a growth of about 12%. And in absolute numbers too, it's about 200 crore or 150 crore increase in revenue.
And going ahead as well, this sort of contribution in percentage terms is expected from the formulation business?
Yes, in the medium term, definitely formulations, or even in the long term, formulations are the key. Our target was always to convert more of our PFIs and APIs to formulations. And we are on the path, and we do expect that formulations will go close to 80% as we go by.
And what sort of margins do you enjoy in the formulation business, and also your blended margins, sir?
Blended margins, but formulations is much higher than that.
Okay, but I'm assuming it's a high margin contributor, and hence the focus.
Yeah, but let me also explain. The margin just doesn't come by making formulations. If you're just a pure formulation company without APIs, I don't think we would enjoy great margins. Since we are integrated, all the margins of APIs, FIs, and finally end up in formulations. That's the reason there's a decent margin there.
And is it fair for us to assume that you will be able to maintain margins? You talked about how the focus was on the bottom line this quarter. Going into the next few quarters as well, and a slight uptick cannot be ruled out?
I would be actually, uptick is always welcome, but I think I'm very happy to maintain this. I expect there could be a plus or minus. I won't say there will only be a plus. There could be a little plus or minus, and I'm happy with these numbers in the short term, till we get some better approvals as we go by in a year or two.
Right. A quick, sir, on your expansions that are currently underway at Granules and your debt levels. If you can just highlight that for us, it would be great.
Net debt has been sort of stable around 900 crores. It goes up and down a few percentages every quarter. And investments and CapEx. Our new facility for formulations, which is under Granules Life Sciences, is coming up. The pilot plant has actually been inaugurated 2 months ago. And the first phase of production, which will be monograph products for the US, from the pilot plant will start by June or July. And the major phase, that will be about 2 billion tablet capacity. And another 6 to 7 billion will be added by October of next year. And we do expect that by FY26, we'll be sort of, with all approvals, running the factory at almost decent levels. And in addition, we are backward integrating into PAP and DCDA with green technologies. That's under our C0 subsidiary. So the DCDA pilot plant will start up in this quarter, possibly in March, and based on the results of the pilot plant, we will be scaling up the facility that will start in next fiscal.
Right.
PAP also will.
Right. Right, so please continue. I lost your audio for a second.
Okay. And we should be, the green initiative is on, and we were planning to set up something in Kakinada with green power, green hydrogen, and that journey is on track, though a little delayed. So we expect that this year we'll end up spending about 5 to 550 crores of capex, and next year another similar amount. We are very cautious. We are going in stages. We are not going all out.
Right. Mr. Prasad, I'd have loved to chat with you longer, but we're unfortunately out of time. We'll hopefully connect for a longer sort of conversation to understand everything that's happening at Granules.
Look forward.
Right. This, remember, is a story that goes on in the books. It's been gradually taken over the market, grown 200 times on its top line in the last 25 years. The question that the street would love to know is whether or not they can double down on their sales over the next 4 to 5 years, aggressively building out their formulation business as well, that now contributes over 60% to its top line. Well, moving on from Granules, which trades with a gain of 1.5% at the day's high point, to another company that reported earnings, L&T Finance. Their December quarter profit jumped 7% to 640 crores, and NIC an 8% uptick. We caught up with the management on their growth drivers and what contributed to the revenue and profit growth. Here's a slice of that conversation.
We have been following this Lakshya 26 strategy, and as part of that, we had 4 goals to achieve. The first one being retailization. We had talked about retailization of more than 80%. We had already achieved more than 80%. So, this quarter we have actually achieved 91% retail book. The second one was, the growth in retail assets. The growth, we said that we will grow at a CAGR of 25% plus. If you would have noticed, we have grown this quarter at a 31% on YOY basis. The third piece was, as we start growing, we will try to ensure that by the time we achieve Lakshya 26, that is by end of March 26, our GS3, gross stage 3 assets will move below 3% and net stage 3 would move below 1%. And if you look at over last, since April 22 till date, so the whole of FY23 and 9 months of FY24, very clearly, directionally, we have been moving towards achieving that 3% target on GS3. And we have already achieved below 1% in terms of NS. So net stage 3 today at a consolidated level is about 80 basis points, 81 basis points.
Okay, in fact, my second question was about your retail and wholesale loan book right now. So right. Basically, if you see right now, the entire focus has been shifting towards, green and green transition. So you also have disbursements towards infrastructure and renewable projects. So can you give me a breakup of what constitutes in terms of total disbursement for renewables and infrastructure?
See, frankly, as part of Lakshya 26 strategy, we took a call that we will slowly and steadily exit out of both infrastructure business as well as real estate financing. Our book was more than 40,000 crores. And as we speak, as of end of this quarter, that is December, our wholesale book is down to 7,000 crores. And it's a very small component compared to the overall retail piece. So frankly, we really don't look at growing this book at all. So from our point of view at this stage, talking about whether it's renewables, whether it's operating roads really doesn't make sense, because our whole purpose is to keep bringing down this book. Let me speak more on the retail side. The retail side, our book has grown by 31%, and we are very close to 75,000 crore book. So on a year-on-year basis, this has been a fantastic growth, I would say. And by end of March 26, we expect that this growth, which we saw in the range of about 30 to 35% over last 18 months, we expect that we will surely continue to grow at a minimum of 25% CAGR. And the growth is coming both on the rural side as well as urban side. On the rural side, we have rural business loans, which have been growing at about 32% this quarter. We grew. Similarly, in spite of industry degrowth seen on the farm side, we have been able to make decent disbursements during the quarter, and there is a reasonable amount of growth compared to the degrowth that we see in the industry. So book over there also is about 11 odd percent. On the same lines, if we talk about urban, we have continued to grow in two-wheeler. We have continued to grow in personal loans. One more piece, which is a very important piece of urban, is the home loans and LAP. This quarter, actually, we have seen a very robust growth, and we believe that the housing sector is doing very well. And this is one area where the growth will come from.
So, quarter 3 being the festival season quarter, was that also one of the reasons which contributed towards your two-wheeler growth, loan growth and home loan?
Yes, of course. Quarter 3 is always, good. But the only, when it comes to rural business loans, people usually keep migrating. They go back to their native places. And also rural business loans is one book which does not grow at the same pace. However, if you see our growth, we have been very focused on, this growth. So, we have been doing about 1,800 crores per month in terms of disbursements. And that's the reason why it's all added up to the overall growth of 31% on the book side.
So, one of the challenges you said is migration of people. What could be the other challenges in rural, loan disbursement?
This migration is a very temporary, people go to their native place for celebration of Diwali. They come back and, it's just comparison between two quarters. So quarter 3 usually is a bit low when it comes to the rural business loans. But all other businesses you talk about tractor, you talk about two-wheelers, whether it's personal loans, SME, home loans. Home loans have been, the whole sector has been doing very well. So we have been seeing a decent amount of opportunity, and we have been capitalizing.
Right. And how's been the growth in the farm equipment space?
As I mentioned, farm equipment, the industry level, first of all, there were challenges with rains, right? It got delayed. And then naturally, the overall industry degrowth of about 5% was seen on a YOY basis. So in terms of disbursements, we have done about 2,000 odd crores in this quarter. It's almost similar to what we clocked last year, same time, that is Q3 FY23.
Okay, and what is the major contributor? I mean, in terms of all the sectors or the segments that you said in retail, which segment is contributing most?
So rural business loans has seen a very good growth. The second piece, of course, is two-wheeler. Two-wheeler also has had, because of the festive period, we saw a decent amount of growth in two-wheelers. Home loan and LAP, although the disbursement levels have been low vis-a-vis, it's a very vast industry. But if you compare, the amount of disbursements that we have done, we were doing close to 400 crores per month last year, same time. This year, we have actually gone up to 650 crores per month. And, it's a very decent growth, I would say. SME is a very small book. We have crossed 3,000 crores at the end of this quarter. We've been doing close to 300 crores plus per month.
Okay. And in terms of your gross NPA and net NPA, what is the current status and how you are planning to bring it further down?
So, as I mentioned, if you look at last, say, 8 to 10 quarters, very clearly, directionally, both the GS3 and NS3 has been coming down. And, on the gross stage 3, we talked about last quarter that we have already, we were very close to achieving below 3%. And this quarter, we have actually done 2.95. So we have achieved that target of both GS3 and NS3 when it comes to retail book. On an overall basis, our gross stage 3 is about 3.21%, if I'm not wrong. And the net stage 3 is about 0.81%. This 0.81 directionally will keep coming down as we start, going into the next financial year. That's the target. That's the game.
Well, that is all about earnings. Companies, of course, detailing their growth map and what worked for them this quarter and what didn't. In the meantime, a quick check on how the street is doing. The Nifty is trying to find its feet. In fact, it has found its feet to some extent. The Nifty back at levels of 21,300. It's at the day's high point. The carnage seems to have been arrested for now at least, and the breadth of the market has also improved substantially in the last half an hour or so. Bank Nifty is also trading firm. Firm, when I say it's relatively better than what has happened to Bank Nifty over the last few days. Almost at the day's high point on Bank Nifty as well. 0.5% gains is what we are picking up on. On the top gainers and losers in the Nifty 50, you've got Hindalco, that's up 4%. So a very smart move coming in Hindalco Industries. Dr. Reddy's up 2%. IndusInd, SBI Bank, after yesterday's sell-off, are seeing some buying emerging in trade. Tech companies aren't doing too badly, but on the sell side, stocks like Axis Bank are still leading the way down at the cut of 3.5%, but that too at its day's high point. Well, meanwhile, NDTV Profit caught up with the REC's Vivek Kumar. Here's what he has to say as well while you take that break.
Power finance company REC Limited has continued its strong performance in the quarter 3 with 14% increase in the net profit. We have with us the CMD of the company, Vivek Kumar Devangan, to answer our questions. Sir, first of all, strong performance in the quarter, but it kind of have below the estimated from the market, and there is a fall in the market stock performance of the company as well. So how would you assess the company's performance in the quarter 3?
Quarter 3 performance has been fabulous for us. What we had achieved in last year in 1 year, this we already achieved in first 9 months of the current financial year. With regard to sanction, we have sanctioned more than 3,25,000 crore in first 9 months, as compared to 2,68,000 crore, which we had sanctioned in the last financial year in 12 months. Similarly, our disbursement has increased phenomenally. Last year, in the entire year, our disbursement was about 97,000 crore. At the end of 9 months, on 31st December 2023, our disbursement has touched 1,22,000 crore. So we are doing exceedingly well, and our asset under management is growing at the rate of 20%. So we hope to maintain this growth trajectory, and our focus is on renewable energy projects, that we are going to increase our renewable energy portfolio, and we are also focusing on non-power infrastructure and logistics. That growth is happening. Our asset under management is growing at the rate of 20%.
Sir, you have already indicated that your disbursement is going to maybe touch 1.5 lakh crores in the financial year ending in March. Do you think that what factors will decide whether it crosses that mark or not?
I'm 100% confident that we are going to cross 1,50,000 crore, because the overall improvement has happened in the power sector. The power demand is increasing. The distribution sector is improving. The introduction of late payment surcharge scheme, the dues of the GenCos and Transcos are being paid on time. The government department dues are coming down. The legacy subsidy dues are coming down. So overall, there is improvement. The AT&C losses are coming down. So it is adding to the overall feel-good factor.
REC Limited has also been selected as the implementing agency for the Suryodaya program that was unveiled yesterday. And so before that, there was Solar Rooftop program, right? And it was the deadline for that was 2022. And now it has been extended to 2026. So there were concerns from DISCOMs regarding the net metering and how it will bite into their profits. So do you think that concern is allayed now, and DISCOMs are willing to continue with that arrangement?
The concerns of distribution companies with regard to rooftop solar are being addressed by both Ministry of Power and Ministry of Renewable Energy. Their proposals are under consideration, and I'm quite confident that we'll be able to address the concerns of distribution company with regard to implementation of rooftop solar. And as per the mandate given by Ministry of Renewable Energy, will be acting as overall program implementation agency for installation of about 40 gigawatt capacity from rooftop solar.
Sir, one last question from my side. So you have already said that 1/3 of your financing will be from renewable sector till 2030, and you have also ventured into non-power sectors. So what does that entail for your interest margins in the coming years? Because cost of funding is right now high, and we cannot predict the trajectory how it will end up in next years. But in that concern that you have ventured into different sectors, what does that entail for your interest margins?
Yeah, we are targeting to hold on to our net interest margin of about 3.5%. That will be able to hold on, and our the margins are likely to improve. We are trying to make conscious efforts to bring down our cost of funding. That's why, as you might have seen, that the proportion of external commercial borrowing has increased from 24% to 27%, and we are also focusing on 54 EC bond. That is the cheapest source of fund available. So on the one hand, we are trying to bring down our cost of funding. At the same time, we are planning to improve our margin for the other projects.
Thanks for tuning in to Talking Point. I'm your host, Neeraj Shah. The case for a chat today with our guest, well, is a valuation convergence in play between India and other EMs, specifically China? I think that's a key question to be asked because of the FI selling that we've seen. Banking has been the top draw. We asked the question about whether PSBs go out and outperform private banks, considering the fact that private banks have had a brutal last few days/weeks. Now, of course, the key question remains about whether this will be a budget which will bring into account some changes and therefore become a budget to watch out for, or it largely remain a vote on account and the key focus therefore shifts towards the July budget. I think all of these questions become very important in light of the fact that we've had a bit of a corrective move in the market and rises are being sold into. Our guest today is Harsha Upadhyay, CIO of Equity, President Kotak Mahindra AMC. Harsha, great having you. Thanks for taking the time out. I hope all is well.
Good morning, Neeraj. All is well.
Okay. It doesn't seem to be all that well from a bull's perspective recently. Is the market kind of succumbing